Welcome to the April 30th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offer some insight as to how we set up our charts, what time frames and indicators we use. As usual, we're going to run through a few broad market averages, then cover open positions in the model portfolio, and finally we'll take a look at what setups are out there. First up is the S&P 500, which is leading the market higher. It was extended about 2 weeks ago and then chopped around in the range and found support at the rising 10 EMA. Then there was a bit of stalling action here on 428 with a failed attempt to go higher, followed by another failed attempt to move higher in the morning, which took out the prior day's low, which then led to a strong reversal in the afternoon and a close in the top third of the day's range. Now this candle looks like a hammer, and generally you like to see hammers at the lows as it hammers out a bottom. So you have this long wick with the small real body. When it occurs at the highs, it's a sign of exhaustion. A trend is slowing down. However, it needs to be confirmed by further weakness. So anything like a gap down tomorrow in the S&P that fails to get back above the real body and stays in the wick, that wouldn't necessarily confirm the bearish hammer or hanging man. But if we had that gap down, price stall, and price fails to get back into the real body, and then the low of the hanging man here is taken out, then that would be cause for concern and could potentially lead to a pullback to the 20-day EMA. But if Thursday's low holds, still looking pretty good, strong uptrend. NASDAQ Composite. The price action was quite similar to the S&P 500, except for the close being not as high up in the day's range. And with the stalling coming at the prior highs here, if it's confirmed by further weakness, then we could see a pullback into the 20. IWP just in pullback mode. This is growth. As you can see, though, the RS line is nowhere near the highs, and it's really lagging the S&P 500. As is the FFTY. So IWP and FFTY are the ETFs we use to gauge the health of the stocks we like to trade, and nothing much has changed over the past few weeks. We thought possibly that growth stocks might turn the corner. That just isn't the case, as recent breakouts failed to impress. Many went up for a few days and just fell back down below the breakout pivots. So there's just no appetite right now for growth on Wall Street. So where does that leave us as we mostly focus on growth? Well, this past week we switched our focus from growth to relative strength, looking for stocks that are trading in a tight range near the highs, which led us to a recent entry in CPE, this oil stock right here, which we entered on 427 on a slight pullback. So again, the focus is not so much on growth here. It's just on stocks that are in a tight range near within 15% or so of the 52-week high. And because of the lack of follow-through and growth, we cut most of our open positions on Thursday, with the exception of KSS, which isn't really a growth stock. But we'll continue to monitor for a re-entry point above the 2-day high. We sold SQ due to the lack of follow-through for a slight gain. We sold CRWD for small losses. It failed to hold the 10-day MA. And that comes after 5 attempts, really 6 attempts to push through 220 and hold. We sold out of AMAT as it's basically just chopping around. Nothing's wrong with AMAT, but it's chopping around heading into earnings, not really making any progress. We sold HUBS. It broke out to new highs here, but pulled back in and took out the low of the breakout bar, so we're out. And we also sold Snap, which we purchased on Wednesday at 60.77. We sold for a scratch gain. And again, this is a leading growth stock, and we just don't see the point of hanging on to growth stocks when they're clearly underperforming. So we're still long CPE, which reports 5.5. Hopefully, if it can stay above this 39 area, we'll have a decent enough of a buffer to hold through earnings. And as for potential long setups, we have We'll go back to KSS, which we still like. Just not much fall through above 60, but if the price action can find support above the 50 MA, tighten up and retake this high, could be in play. EVR, false breakout on Thursday. However, if the price action can hold above the 140 area over the next few days, then it could have a decent shot of breaking out once again. NMM broke out to new highs recently. No entry yet, but we'd like to see one more day of like a pullback to the 10-day EMA with a bullish reversal candle. That could put NMM in play. DCC, another shipper, looking pretty good. If it can shop around for a few days, then we'll look for an entry possibly over this this 429 high, which would also clear the downtrend line more than likely if the price action were to follow through. And WAL is a recent breakout to new highs. That's paused for a few days and looks like it could be in play over the 3-day high. And the last chart of the night is SBH, which is trading in a tight range above the rising 10-week moving average here. Obviously, if it can clear several weeks worth of highs here, could be in place, so I'd say above 21. Oh, and one more chart. Here's low. Low undercut the 200 AMA, then popped back through the 50 and has been in a solid uptrend before stalling and pulling back into the 20. This is the first test of the 20 after an explosive move up. Could be in play here above 200 over the 2-day high. So just a quick recap. The S&P 500 closed with a bearish hanging man candle. However, the candle needs to be confirmed by further weakness. Growth stocks continue to lag and they're no longer a focus point for us right now, as we moved on to stocks that are just showing pure relative strength. So that's a wrap for tonight's video. Thanks for joining me. Have a good weekend, and we'll see you next week.